June the 5th after the market close, and we start off looking at a chart of SPX here. What it happened here yesterday, we had this unconvincing doji here, a small minute doji with a little body here, did not show a proper capitulation, but today the market tried to go up here, and couple of times it hit that 200-day moving average. It has closed barely near that, and it's debatable it's above or below it. I can't tell, but it is even if it is, I really don't care, because this is not convincing enough to give us any satisfaction that the bulls have taken back the 200-day moving average. Anything below this 200-day moving average is bear territory, and the bears were not about to give up today on the whole market. They kept on teasing the market, and they kept on pummeling it. And let's take a look at it at the 2-minute chart, 5-minute chart here, and you can see here 2 days, 5-minute. The market has started going up here and ended the day at 1285, a little bit down. The Institute of Management is ISM, Institute of Supply Management. A report came out that the service sector expanded a little bit better than expected, and that was some good news. The market was looking for some good news, give it a catalyst so that it can move and go up higher, but that wasn't enough, and as a result it just kept on circling here at 1285. It came here early in the morning and tried to hit that, and then it got pummeled back, and then back and forth. I tried to go in the market twice today, and this is just a personal experience. I lost money on both times because the market would just drop back on me, and I tested the waters with small feelers, and there were not anything that I could do. I use all things just like the textbook, but I lost money here today testing the waters here twice, not one time but twice. Here we go. Let's start looking at NDX, which is also forming. It is bouncing off, and there was some better action here, 9 points here on NDX. Let's look back here to 9 months here and see how this is going on, and you can see we just bounced off here at the 200-day moving average and moving it nicely here. This stock is doing well, the asset, the index. RUT, on the other hand, the broad market here, is sitting here at 746 and way below its 200-day moving average. All the market is now oversold in this regard, and some of these stocks that were trying to go up today also happen to be which one we have here. There's one stock at PCYC. I want to mention this stock. It came into us today. It is a very bullish stock here. We don't know much about it. I haven't traded. I tried to trade today and I lost money on this one. So it happened here is 1.7 million shares here. It is very bullish and strong to the upside. LQDT, that's another one here we mentioned yesterday, and these are bullish stocks here. You can take a look at it in this depressed market, and a market which is not tradable yet and convincing enough, is still sitting there at 61.36. Lulu, and let's take a look at it. It's trying to retake its 20-day and the 50-day moving average. Under Armour, UA, that's another one here, and this is pretty good here as far as the bullishness. This stock has not suffered during this market downturn. So I'm just going through some of these here that I know of. And SBUX, Starbucks, take a look at this, and that is trying to retake its a 21-day moving average. Starbucks announced today that it will buy a bread company, and so good for them. I think this stock should move a little bit higher. Home Depot, one more, and let's see how that did. It is sitting there as below its 20-day moving average and below its 50-day moving average. So the market still is not convincing enough to enter. And what basically is happening, if you look at it today on a SPY, the volume was very low, thin volume, 163 million shares, which is not good enough. SPY is above its 200-day moving average, but you need to see higher volume because big money is still sitting on the sidelines.